Welcome, everybody, to a bonus market close for the week. It is Monday, and holy banana bread, we got ourselves a red market. It's looking pretty darn red out there. So we're gonna take a look at that. We got a bell coming up, of course, at 5 o'clock. What are we talking about? 5 o'clock at 4:30. At 4 o'clock, we have a bell coming up. So we get all of that fun stuff coming up. I think I don't even know what time it is. For some reason, when I scheduled the stream, it scheduled it at 3:40, not and I said 4:40 in the chat. I don't know what I was talking about. So we're here. We're here. It's a fun day. We got lots of stuff to cover. We got all your questions, all of that fun stuff. So we'll do all of that as we get underway. So, first we're going to let me just pull this up here. All right, let's bring back the market. That's the actual challenge. Let's get into our list. Here we go. So as you can see, it is a red day thus far on the market. The TSX is down 0.73%. Holy banana bread. There's some reasonings. There's a whole bunch of weird stuff going on, in addition to just the normal fear about rate cuts. S&P 500, they're also down slightly, minus 0.13%. NASDAQ, pretty flat. I mean, they are down 0.01%, but to me, that's normal standard deviation. Gold is up, silver's up, oil's down a little bit, which is interesting because OPEC had come out over the weekend and said they're gonna keep the cuts going to keep the price of oil up. But so far, oil hasn't seemed to have responded to that. Bitcoin's up about 1.95%. You can sort of see we had a nice little burst here this morning. And then, of course, it's fallen a little bit and moving a little bit forward. So it looks like we got a little bit of a pattern forming here. Let's just sort of take a look. This is kind of like, let's pull this over. All right. So we got something coming like that. And I'm not going to go to that top one. We'll stay about here probably. And let's see here. Yeah, we probably have a shape similar to this. We'll see it better as it develops. But that means it won't take long before it will break out of here. So it means right now it should be turning around, coming back up and sort of hip-hopping back and forth in there a little bit. So we'll see how that goes. Anyway, let's take a look at the heat map. We're about to see a lot of red, folks. Here we go. What the banana bread? That's the U.S. heat map. Where is my Canada? Did I somehow close? Wait a minute. No, there's the ETF heat map. And there's the US. Okay. For some reason, I got this back onto the US. I don't know how. Let me switch it to Canada. Here we go. Bang. We got Canada and we got the red. We got a lot of red. Amazingly enough, the banks are not that deep in the red other than TD and Royal Bank. CNQ, look at that, down 4.42%. Suncor's down 4.62. Look at this. They're both railroads are down. Dollarama, they're coming back to earth. They had that big, if you guys remember here, they had that nice little bump at the end of the last Friday. But they're coming back. They're coming back to earth. Poor Dollarama. Alimentation Couche-Tard, they're up 0.11. We'll take it. We'll take it. All right. Now, ETF wise, yeah, we got a little bit of red in here as well. XIU, XIC, a whole bunch of them in there. Yeah, nothing really exciting over here for the moment. We'll come back to here a little bit later. And in the US, we got kind of a mixed batch, really. Look at NVIDIA. NVIDIA's up 4.43%. That's not too shabby. Meta's up, but Microsoft's down. Amazon's up. Visa's down. So yeah, there we go. And Tesla. Look at Tesla. Tesla's down again. Holy banana bread. They just can't get moving in the right direction. So all right, let's take another little shot at the crypto. The crypto map looking a lot more healthy. We got Bitcoin here up 1.96%. Ethereum is just a little bit under the number line. Solana's up 2.11%. XRP's up. Dogecoin is up. Cardano's up. Avalanche is up. We got a little bit of green in the world of crypto. And let's pick some weird coin that I have no clue what it is, and I can just make fun of it because I have no idea. Here we are. Finchia. What the heck is this? Finchia. I don't even know what this is. But they're up. They're up a little bit. So yeah, does it actually tell me down below here what this is? No, it doesn't. Just gives me some volatility. All right. So Finchia, for those of you who are obviously on Finchia, on that coin, I have a feeling that there's nobody on that coin, at least in this community. Holy banana bread. All right, let's get to chat. Let's get to the chat. All right. We got Paul coming in. Hey, if you do a breakdown on the Canadian oil and gas sector, can you look at the ticker ALA? I can do that. Let's do it right now. Let's look at ALA. I need to bring up here and bang. Oh, look at that. AltaGas right there. It's already in my my window. I cheated. I saw this before the stream started and I brought this up for you. All right. So we're already on the 3-year and you can see, like most of the oil and energy companies, they struggled at the beginning at this part. And but the last year and a bit, well, gosh, this is almost, this is a little more than a year. They've been doing fantastic. Look at this. It's been a nice move up. This is a quarterly stock. They have a decent little dividend, 3.87, but definitely doing a really good total return job here. When we look at their key data, we'll take a gander down here. Return on equity, 9.48. I'd like to see it a little higher, but still not bad. 2.80 on the return on assets. They do have a fair amount of debt. So we're looking at 125% debt to equity. So that's concerning, but with rate cuts, if they come, we're gonna, it's gonna be good. And let me show you something here, guys. I'm just gonna drag this over here. I did a poll. Hopefully you guys all took part in it. So far, 92 people have answered. When are the rate cuts? When are we getting our rate cut? So it's a dead heat between June 5th and July 24th. 30%, 30%, 20% for September 4th, 7% for October 23rd, and a whopping 13% for December. I really don't think we'll make it to December without a rate cut, but I am, like I said, I'm Camp July, even though I'd been on the June side for so long, and I hope I'm wrong. I hope the June people win. We'll find out. Next market close is Wednesday, so we will absolutely get to we'll get to see all of this on Wednesday. So that's going to be fun. We'll know. Heck, you won't even have to look at the news. You won't have to look at the news. All you'll have to do is look at my thumbnail. My thumbnail will tell you. I will. Here's what I'll do. Tell me if you guys think this is a good idea. So for the thumbnail for the market close, instead of just doing one of the Canadian cities, because I've been sort of highlighting Canadian cities, at least AI's version of what it thinks Canadian cities look like. Today's, by the way, was Edmonton. I think the bear wearing an Oilers jersey kind of gave that away, because sort of in celebration of the Oilers moving to the Stanley Cup final. I know Vic asked me yesterday who was going to win. I told him it was Edmonton, but I thought it was going to go into overtime. I was wrong about that, but glad Edmonton did it. Good to see Canadian representation at the Cup. It would be really good to see that Cup come back to Canada. So I'm Team Edmonton for the finals for sure. All right, but yeah, back to what you were asking, Paul. I think ATL is a good. I think they're a good stock. One of the things that is really nice about them is that they're multi-tiered within the oil and energy sector. So they've got like midstream, they got utilities, and that really I think helps diversify them. So when utilities is suffering a little bit, it doesn't pull them down. It doesn't pull them down as much because they do also produce natural gas and all of that fun stuff. So I think it's a solid company. I think it's probably a good long-term investment company. for sure. All right. Next, we got Jordan. Good afternoon, Candace and chat family. Hope all are well. Always good to see you, Jordan. I was gonna say, I almost said happy birthday, but it's not your birthday. I hope you're having a fantastic day thus far. 9 is in the house with a whole bunch of banana bread. Banana bread for everybody. Everybody grab a piece. Everybody grab a piece. Bleak is here, present. We got MP. Hi, Candace. Hope you're having a great day so far. I am. And it's funny. It's funny because MP corrected the spelling of my name. But 1 year at my birthday, my mom went and picked up the cake and brought it back. And she didn't bother looking at it. And it said, "Happy birthday, can't dance." I was like, really? Wow. That was just, that was fun. So Trevor's in the house. I'm here too. And 9 says, I added $1 to my massive QQCC position today. Ooh, your challenge is moving forward. You're, you're going to do fantastic. I can't wait. This is almost something you should be documenting every move because I think it's hilarious. I think it's hilarious. And Ricardo's in the house. I added another 100 shares to Groy today on the recent dip due to the acquisition of a copper mine. I have about 530 right now at about an average of 1.81. That's not too shabby. Not too shabby. Oh, look, we still have the thing up. Let's take a look at Groy. Groy. So Groy, for those of you who don't know, it is a gold royalty company. All right. Let's, as I normally do, we'll go right to the 3-year. Now they haven't been moving in the right direction, but gold has been doing better, and you can sort of see a little bit of a bump here from that. So let's take a gander down here and see what's going on. They got a little bit of a yield, a 2.454% yield. And we're going to go and look at some of my favorite stuff. Well, this I'm not happy with. I'm not happy with this part, Ricardo. We got a negative return on equity, negative return on assets. Usually that means the company's not being profitable. What was their EPS? Let's see here. We'll get it off the front page. I don't know what I was looking for there. Oh, it's right. I looked here and there was nothing listed. So I don't know what exactly is going on with them. So I'm a little wary. So the one that I added to the challenge, actually is I went with OR. So that's the Osika, Osisco. There we go. Osisco. I went with these guys, and I'll show you the 3-year on them. Now they've been moving a lot more in the direction that I like to see for sure. They've got a smaller dividend though. So you're getting a little bit more, I think, in the lines of dividends. So we don't actually have an EPS with these guys either. I'm going to come in here. Now I'll tell you, if they have a negative return on investment, I will, oh my God, look at that. They do. All right. Ricardo, we're in the same boat. Different names, but we're both in the same boat. Ah, dear. Oh, dear. Oh, well. It's good times. We have exposure to gold. The two of us do. So that's not too bad. I was thinking that when I was pulling in, I'm like, oh, look, watch this have a negative. And yeah, we're right. But I do know that with OR, I don't know with your company whether or not what their outlook looks like. I know I did a bit more digging into OR, and there's a lot of things in there that I do like. So, all right. Good Vibes is in the house. Hi, all. Good to see you, Good Vibes. They just became operating positive this past quarter due to large acquisitions and diversifications. There you go. That's what I wanted to hear. So if that's the case, they're probably going to be looking at starting to move in the right direction and also get that negative, hopefully back to a positive. And if I remember correctly, I think with Osiko, it was kind of the similar situation. We'll see. Maybe you have the right company and I got the wrong one. But that's okay. I'm not into them too deeply. Mohammed says, hi, Microsoft is down 4% in the last few days. Is it a good entry point for my DCA? All right, well, let's take a look. We're here. We might as well. The market has closed. Oh, there we go. I almost missed it. Almost, but not completely. All right. Microsoft MSFT. Let's take a gander at good old Microsoft. Now, I am very bullish on Microsoft. So for me, any retracement at all is probably a good time to be looking at getting in. And let's just go to the 1 year for the moment. So you can sort of see they've been just fantastic. And we and you do get these little bumps like that. And we may be in another one. So I would say, yeah, that's not a bad position in my opinion. Chances are it might go a little lower and then go back up. But it's hard to predict the market. Just because it did it here this time doesn't mean we're going to see the exact same thing on this one. But I am bullish on Microsoft, absolutely. And we got Al Bundy, who's saying NVIDIA is back up today. I am happy. Yeah, NVIDIA is, like I said, I'm a big fan of NVIDIA, and I'm very bullish on them as well. So that's not too shabby. All right. And Ricardo says, every royalty company will have that due to the nature of the company. Don't be afraid of that. It depends. It depends on the company. It depends on the company. So that's kind of thing. Like here with, let's go back here for a second. All right. So this is Osikyo. Let's come in here. This is one of the things I did really like with them. They've got very little debt. And that's a normal thing, absolutely, and let's go to yours. That's still mine. That's an absolutely big thing when it does come to royalty companies. They do tend to not carry a ton of debt. So I imagine yours will be in a very similar spot. You're even better. Mine had 10% debt to equity. Yours has 2%. So that's not too shabby at all. All right. Let's see. The biggest thing that drew me in was the book value of 3.75. So the chances to double for me would be better than putting it in a Franco-Nevada or something else. Yeah, I would agree with you 100% there. Yeah, absolutely. 9 says, do you think it is safer to use a laptop or phone strictly for banking/brokerage account? I'm going to buy a new device strictly for those uses. It really depends. I mean, I think with a laptop, you can certainly, let's just say, I think you can control it more, and it's a lot easier to use. So it's one of those things. The big thing is that if you have, like, if you're setting up one just for, banking, brokerage, the big thing is just to only do that on it. That will be your big thing. Don't download stuff. It's kind of getting to the point, guys, where downloading stuff is getting so dangerous because there's just so much bad malicious stuff out there that's trying to hack you, trying to get your account information. It almost makes sense to have like it doesn't even have to be a good laptop, but just have a crappy laptop that you just use for downloading that is off of your main network as well. Because that way there, you can get things onto it. You can then do, you can do whatever scanning you need on it just to make sure everything is safe. But you don't want to give something access to everything that you have. So, okay, it's a preference, really. I like to view my data on the computer, but I do most of my transactions on the phone. There we go. See, I do everything on the computer personally. And the purpose is to prevent hacking. They are getting too good. They're getting really, really good. And the worst thing is, they're only going to get better. It's sad to say it, but they're getting so good to the point that one of the key ways in the past is you could almost always identify scammers, especially scam emails and stuff, because the grammar was always so bad. But now with AI, they've cleaned that up. You have no clue. And soon enough, it'll be to the point where you won't even be talking to, somebody, some person in a foreign country who's trying to scam you. You'll just be talking to an AI that will sound exactly, exactly like maybe your neighbor. Who knows? So it's getting tough. It's getting tough out there. So you have to be really, really careful. Even like right now, if my mom were to call me up on the phone and say, hey, look, I'm really tight for $100. Can you just send me $100, please? Um, you know, I would be a little bit leery. I would be like, well, okay, give me a moment to think about it. And then I would disconnect from her and I'd call her back to find out. That way there, I know I'm actually talking to her and I'm not talking to an AI that cloned my mom's voice. So, and that may sound like being overly paranoid, but it's getting there. And if you're not prepared, you're going to be one of the people who does, get pulled into one of these scams. So you want to try to avoid it. Do everything you can. You can't be too cautious. You absolutely can't. Even with my mom, and this is going back. This is going back to the early ages of the internet. I refuse to open anything she sends me. Even if she says, "Why don't you open it? It's safe. It's fine." I'm like, "Nope, I'm not opening it." It's just, my mama, she's not very good at avoiding viruses, malware, and because I know every so often I'd go visit my mom and I would have to, she'd be like, my computer's working so slow. I don't know what's wrong. So I'd take her laptop and quite literally, I would spend hours just removing malware from it. It was bad. It was bad. She would click on anything. I'm really surprised she hasn't like lost her house or something to a scammer, because she'd walk right into it for sure. All right. Ricardo says, depends on your brokerage. If you have a reliable brokerage, then you should be okay. MP says, I'm in my early 40s and new to investing. I currently hold a few Canadian ETFs, a REIT, and some individual stocks. My goal is to generate retirement income in 15 to 20 years, investing $1,000 per month. That's fantastic. That's fantastic. And, you could do it. It won't be as good as if you had started when you were in your early 20s, but with the right, with smart moves and smart plays along the way, you can certainly build up a pretty nice retirement egg. And if your goal is income, which it sounds like it is, it's getting better and better for income. So you could really build up and really flush full a TFSA that will just keep on generating a whole bunch of tax-free income that's not going to count against any of your supports in retirement. So that's really, really good, because the last thing you want to do is you don't want to be creating income that's then going to cause, one of your supports to get clawed back. All right. Plus dividends. Should I focus on a few diversified sector industry ETFs or include a mix of ETFs and individual stocks? Well, here's the thing. You've got lots of time. So in your early 40s, you got a good 20 years, maybe 25 years. So here's the thing. You can go into the income stocks now. That's fantastic. But I would say look more heavy at, because you have time to recover if we were to go into a bear market. I would look totally towards total return stocks. So go for your biggest bang for your buck, because what your goal should be is to grow your TFSA as big as you can get it. So if you have something in there, so let's say, for example, you have an income stock that's giving you 10%. Fantastic. You got 10%. That's great. You could even reinvest that 10%. Fantastic. But you could put a total return stock in there that may only give you, let's say, 3% on dividends, but then you might be getting, maybe an additional 10%, maybe depending on the stock, even higher in growth. So when you're looking at the total return, that gives you a chance to really start to grow and flush. And the lower the dividend, usually with a total return, the more you're going to get in actual growth. So if you can grow, and then of course, once you start getting closer, you start to say, okay, let's start, toning down on the total return stocks, start transitioning more into the income, so that when you are ready to retire, you can move it pretty much over to an income portfolio. And you should have more income coming at you at that point than what you would have had if you had just gone income right from the beginning. Now, I do have, and it's probably going to be July, either late June or early July. I'm going to do an income portfolio, basically a video on that. So basically a retirement portfolio, and we'll tear down a whole bunch of stuff in that. I think that'll be very useful to sort of give you an idea of where you're going. All right. Al says, MP, I'm new to investing too. I just bought my first stock on March 7th. Wow. Al, tell me, I need to know, what was your first stock? And I'll tell you guys, my first stock I ever bought, first stock ever, was Fortis. So that's and it's kind of neat. That first stock is always holding a special place in your heart. So yeah, everybody in chat, tell me what your first stock was. I'd be curious to know. I think you all are going to remember it. I think you will. It's because it's a big rite of passage. Like it's like walking for the first time, and although you probably may not remember that, but buying a stock, yeah, that's pretty big. MP says, it feels like information overload and I get decision paralysis. Uh-oh. Well, here's the thing. You found this community. We've got a fantastic group of people here. So you can, I answer pretty much everything thrown at me. So use me as much as you want. We got the Discord community. There's a lot of great people there. So you can ask lots of questions over there. And plus I got a really good back catalog of videos, and I'm also always adding new stuff to try to make it easier for new investors and for, pretty much every level. I try to hit every level, but I do have a special spot in my heart for the new investors for sure. Al says, I didn't diversify. I think I got jaded from my poor MF performance over the years. Yeah. I'll tell you, here's a funny thing. I'll mention this as well. I have talked to a lot of investors that start. They go and they maybe they grab the code for Wealthsimple and they get into Wealthsimple and they're thinking, oh, this is great. And they start to build that first portfolio. And, a little bit later, they happen to tune into a video and I'm talking about the TFSA and they're like, oh yeah, should I be using that? And I'm like, well, where's your portfolio? Oh, it's just in my personal account. I'm like, oh no, you want to move it into your TFSA. And that happens. It happened to me. I will admit it. Very first thing I bought a couple things in my personal account as I was, then it dawned on me right away. I'm like, wait a minute, what did I just do that for? I sold them and moved them over, of course, into the TFSA. But you want to always be you always want to be taking advantage of your TFSA. You want to make sure, because as you get towards retirement, if any account out of all of your accounts, if any of them is maxed, you want it to be the TFSA, because that's going to be the one that will save you the most money when it comes to taxes. And that's the one where you can really, 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 it's free money. It's basically free money if you think about it. All right. Ricardo says, let's see, MP, one advice I can tell you after half a decade trading, there will always be way more buses to catch than what you miss. If you stick to a strategy, maintain discipline, but also know when to fold them. Yeah, sort of like the Kenny Rogers song, but it's the same thing. There's lots of moonshots, and sometimes you'll miss a moonshot and you'll be like, oh, I can't believe I missed that. I can't believe I didn't get that stock. But here's the real danger, right? Because as Ricardo says, there's going to be plenty more. There's lots of ships going to the moon. So you miss one, you just catch the next one, or maybe the one after. Who cares? As long as you catch one sometime, that's fine. But what happens is that the moonshot's already on its way, and it's already too late. And so many people will sometimes say, "Oh my God, I can't believe I missed this." But maybe it's going past the moon. And you jump on then, and no, it's not. It's coming back, and you end up losing out because of that. So that's kind of that whole. They call it FOMO, the fear of missing out. If you missed it, you missed it. There'll be more. Don't worry about it. The other thing is, you're going to have losses. There's no way around it. You will pick a stock, and it will do the exact opposite of what you hope for. The big thing with that is, don't beat yourself up over it. It's really easy, especially as a new investor, to sort of go, oh my God, I can't believe that happened. You get really discouraged, but don't. The goal is with investing overall is that you just want to have more wins than losses. And then that will make you a successful investor. So more wins than losses, but keep in mind, you will have the losses. You take even somebody like Warren Buffett, he has a ton of losses. But when his wins are really good wins. And, one of his wins probably easily covers oodles and oodles of his losses. So, That's just that whole strategy. Win more than you lose. Um, Learn to control your emotions. Those are some really key things to being successful. 9 says, and obviously I'm going to buy the device new. If it's used, it could be hacked. Yeah, absolutely. Absolutely. And like I mentioned, I think I mentioned this on this week, yesterday. Um, some of the wires, like your phone, like for example, phone to computer wire, some of the wires are actually fake. Like they'll work, but they've been designed with some hacking stuff inside. So there are wires. Like I would never buy a phone wire off of Amazon if I needed one. So if I need one, I'll go to the Apple store. I'll pay, I'll pay more, but I will know that that's a real cord and I'm not going to get scammed or I'm not going to lose anything. So just something to keep in mind. Ricardo says, MP, also keep an eye on macroeconomics since it dictates a lot of the market moves. Yeah, exactly. Paying attention to the news. And that's one of the reasons that I do this week because, yeah, sure, I have a couple of funny stories usually, but a lot of the news and a lot of that stuff is what's driving the market. So, if you see, for example, in the news that, let's say, for example, a Category 5 hurricane hits a place that, let's say they make coffee or something. Well, then if it wipes out all these coffee crops, there's a chance that the price of coffee is going up, which means, that might be something to look into investing wise. So, speaking of coffee though, folks, it's, oh, I'm still small. I should bring myself back up to big. There we go. Fuzel says, what do you think on average Canadian saves per month in this inflationary time? Well, it's kind of a double-edged sword question. What I mean by that is that I don't know if people are saving a lot. I think people are choosing not to spend, but at the same time, the fact that groceries are so much more, the fact that rents are so much more, the fact that mortgages are so much more, it makes me wonder how much of that potential savings. So when people say, oh, people are just choosing not to spend. Well, is it that they're choosing not to spend or that everything is so expensive that all their money is going into the normal things and all of that normal money that, they normally like their disposable income is just evaporated. So I think it's kind of a situation. Now, there are, of course, people who are, well, better off. And I think those are the people that are probably thinking, maybe I'm not going to spend right away. I might put some money aside in case this gets worse. So definitely. Now, how much that would be, really, I think that's really individual. So I think it's hard to say. It's very, very hard to say. All right. Al Bundy says, I bought 299 shares of NVIDIA as my first stock. That's fantastic. That's really good. Now, think about that. When that goes 10 to 1, that's 2,990 shares of NVIDIA. So not too shabby. Not too shabby at all. Prairie's in the house. Good afternoon, BBB, at work and late to the show. So I'll be listening in and watch the beginning of the replay. All right. And we have IBM as your first stock. Nice, nice, nice. TD. Northwest Health, not too shabby. Dividend Shark says, not sure about the average Canadian, but I am sure to save and invest 90% of each paycheck due to real estate covering all of my living and housing expenses. Freedom 35 is the plan. Not too shabby. Now, that's one of them things, like some people, like when it comes to real estate, here's the perfect ideal. Like if you were going to buy a house, this is what I would do. If I was looking to buy a house, I would almost consider buying a duplex. And that way there, I could then live in one, I could rent out the other one, and have that rent cover all of my mortgage and everything else. So that way there, I would effectively be living for free. I've actually done something similar to that. Actually, this was Ottawa, but many years ago when I was working for Compaq, I rented a 2-bedroom house that had a really nice, basement. So I just moved into the basement, and then I went and rented out the 2 rooms above me, so on the 3rd floor, and I basically both of them were half of the rent. So the two people I rented it out were paying the full rent. I was living basically rent free in the basement. It was a good deal. But I will admit it was at the same time, sometimes being a landlord of some sort is it can be a pain, especially if you get tenants who don't like each other. And sometimes I had two that almost had a small war with each other, so that was never very fun. MP says, how do I identify a stock that is a good total return stock? Are these also ETFs? Is there a simple indicator or formula I can use? Well, it's not so much a formula. So if you're thinking about, okay, what's a good ETF or what's a good stock? How I would handle it is, let's pull the thing back up here again. All right. So I'm looking for, right now, I'm sitting here on TMX Money, so money.tmx.com. And I'm thinking to myself, I'd like to find a good total return stock. So what am I going to do here? So I will go up here to, just give me a second here, go to the tools, and we'll go to a stock screener. So a stock screener, it's basically, it's a program where you can basically say, this is what I'm looking for. So I will go to, for example, let's say if I go to performance, and I'm looking for something doing really, really well. So I might say, let's see, price performance year to date. So I want something that's been doing well this year. So I could put this in, for example. I will hit that add filter. And so down here, now I can set my performance. I got a bar. I can slide the bar if I want. Now that's pretty high, but I'm saying like I want to look at stocks who are, for example, making, let's say I'm looking for at least, well, let's see, if your average dividend, let's say you can get 13%, 14%. So let's look at 15% and above. So I'm going to look at something that's done at least 15%. All right. So down below, these are all the stocks. There's a ton of them. So I'm looking here and I'm like, okay. So I will, of course, want to put more filters in. So for a good total return stock, one thing I'm going to look at is I'm going to look at, let's see here. I'm going to look at, we'll go return. Whoops. Helps if I spell return right. All right. So let's try this one more time. There we go. So I'm looking for, we're going to look at return on equity. So here it is right here. I'm going to add this as a filter. So, all right. So now I've got return on equity and I want something that has a good return on equity because that usually helps me know that that stock is probably going to continue to do well. So let's say that I'm looking for at least, we'll keep it at 15. We'll say 15% or better. All right. So now we still have a lot of stocks here, but it eliminated quite a few. So now let's say another thing I'm looking for is I'm concerned about volatility and I'm concerned about penny stocks. So I don't want a stock that costs next to nothing. So what I'm going to do in a situation like that is we'll come over here. So let's go to company basics and we'll go to the stock price and we'll add that. So let's say I'm looking at something at least I'm going to go, you know what? Let's just stick with the 15s. I'm going to say it's going to be $15 or more. So we'll hit that. And now that's removed a whole bunch of the penny stocks out of here. And, it's starting to come down a little bit. But if I'm happy with this, I can always then go to my performance tab and say, okay, let's see what we got so far. And I can take a look and do a sort by year to date. So, all right. So here, like DRX right there, that was in one of my lists. So DRX, we're looking at them. They've done about 150% year to date. So I can then take them and open them up and take a look at them and sort of see, okay, well, what's going on with DRX? So this is ADF Group. They're actually owned by a British company. But when I take a look, we'll go with the 3-year. Look at this. These guys are exploding. They're in the price range that I was looking at. They don't have very much yield. So this is all coming from growth in this situation. I'm going to now come back. We'll take a look at the key data. We'll come in here and look at this. Return on equity, 21%. Return on assets, 10.79%. Their debt to equity ratio, 32%. That's fantastic. I'm liking this. So right now, that's enough to make me want to go deeper in looking at that company. And there's a whole bunch. I could even go to the next one. So now this one here is AQL NVIDIA. So I might say, okay, well, I want something Canadian. So maybe I can add another filter. So for example, I can add the exchange and say, okay, I only want my stocks to be on. So right here, let's say right now I've got it on the TSXV, so the venture. I'm will also say the TSX. I'm okay with the venture. Like Hammond Manufacturing's on the venture. So there we go. So that eliminated a whole bunch of these other stocks. And there's just a whole bunch here that I can look at. So you can see DRX, we got MUX next. Let's take a look at that. Open link in a new tab. We'll look at this. So this here is McEwen Mining. All right, what have they done? Take a look at them. Okay, they haven't done as well. I'm not as impressed, but they have been building things up. But you just go through them one by one. You take a look at them. And don't be afraid sometimes to zoom out and just see what the heck is going on with a company. So you can see at one point, this company was really, really good. They had some really, really big spikes, but and that's the whole thing. Go into it, go use the screener as a way to maybe pull up a handful of companies and then sort of do a bit more deeper due diligence on those companies to sort of see what's going on with them. All right. All right, Prairie says, a senior coworker is a devout investor and had been encouraging me to start investing for years. Having started my investing journey January 2023, my only regret is that I didn't start in 2020. Yeah. If you could have hit the, I have no idea. Jill is just reeling something in here.
You know what this is. This is for you.
Oh.
You should take it out and show them.
It's a sign.
Well, you don't ruin it already. Yeah.
Sorry.
It's a neon sign. It glows.
All right. Well, anyway, we got a mountain finance sign, so we're thinking of putting it on the wall. So anyway, you guys will see it when it's ready. I was just wondering what was going on here.
I wanted to open it so you could show them at least the part of it.
Well, open them if you want. Open it. And I'll show them. If you want to just cut the thing. Yeah, it's just a sign. It's kind of cool. It's definitely cool. All right. Yesterday says facts. Paul says, thanks for the breakdown on ALA. You're welcome. Not worth crying over spilt milk at this point. So I'm at it now and won't stop. Bismarcky says, good afternoon. No, good afternoon, Bismarcky. Let's see. First stock was so long ago, I don't remember. Really? Holy banana bread. Are you doing a draw for membership today? Well, I wasn't. Did you want me to do one? I can do one. Let me do one. I normally do it first Sunday of every month. I normally give away around 10. I think yesterday we actually did 11. So, all right, let's do one right here, and maybe you will win. I don't know who's gonna win. It's up to the YouTube algorithm. I have no control at all. But all right, there we go. And the winner is Tanya. Tanya won. All right. Congratulations, Tanya. That's fantastic. But yeah, so we do those every so often. And a lot of times, like, what was it, last Friday? Uh-oh. Look at this. We got the black hole singularity here. There, we'll move back here. Let's actually go big again. Because once Jill has that thing cut, it's funny. I knew she was ordering the sign, but I thought it was much smaller. I'm looking at it and I'm like, holy banana bread, this thing is big.
Well, it has to fit all the letters.
Yeah, okay. Well, it's big. It's a big sign.
Well, it better be for work. Anyway, okay.
All right. Bismarcky says $250 a week between RRSP and TFSA. Lucky I am mortgage free. Nothing wrong with that. Yeah, I mean, everybody always has it. Like, I wish I had invested early, because that's the thing. The saying I think goes is the best time to start investing is yesterday. The next best time is today. So it's kind of that fun thing. Ricardo says, I started in 2019 because I stumbled across a YouTube video of Roaring Kitty and decided to buy $500 of GME because of him, and it turned into 7.5K. That got you hooked. Yeah. Actually, Roaring Kitty was in the news today. Apparently, apparently it caused a GME or GameStop. I think was it GameStop? I think it was GameStop to jump again today. So if you take a look at GameStop, I think they had a little bit of a bump all because of Roaring Kitty again. Let's see. And Ricardo says, which I realized quickly I had hit the lotto ticket because I have never had that kind of return ever again. Yeah. The thing is, when you get these things like with what Wall Street Bets did, you have to time it like ideally. Like once you hear that it's happening, it's probably too late. The only thing you're going to do by jumping in late in one of these schemes, or not, I'm calling it a scheme, but in one of these situations, is you're basically just giving your money to whoever, because as you're jumping in, the people who started it, the people who organized it, the short squeeze or whatever, they're the ones who are cashing out and taking all of your money. So you want to be really careful with them. I'm glad that you had a happy story, though, Ricardo, because so many people did not. All right. Do we?
Mostly.
All right. Well, I'll show you guys the thing here.
Do you want to take it?
Yeah, I can take it. All right. Oh, holy banana bread! This thing is heavy.
It's heavy and big.
It's heavy and big. Can you guys actually? There we go.
You can get an idea of how big it is.
Yeah. You'll see so there we go, and it lights up.
Yeah.
And can you just grab it so that it doesn't fall because I can't put it down?
Yep. Hold on.
No, it's on the floor.
Oh, okay. Yeah, of course.
Right there. Perfect. Yeah. All right.
And you can change the color with it.
Yeah, we can change the color of it so that way there, when we have a red day, I don't have to have a little bit of tinge of red on the side. We'll be able to light up the whole sign in red. Yeah. And then green on green days.
You'll be able to see on Wednesday.
Exactly. Yeah, I should hopefully have this up and ready by Wednesday. I'll have it up and ready by Wednesday. No questions. What website are you looking up these parameters? This here. I'll pull it back up again. Let's go to I'll actually go here to the main page. So this here is TMX Money. So TMX, they are the company that owns the Toronto Stock Exchange. They run it. So this is the official website. So you can go in here. You can do a lot of different things. They've got screeners on here. You can do an ETF screener. You can screen the U.S. market. They got lists too. If you're like looking for a list, let me see here. Where are their lists? Down here. So for example, these are their top dividend lists. So like if you're like, I just want to find some really crazy dividends. Well, here's some crazy dividends here. Like this one here, CUEH. So the CIBC US Equity Index ETF Canadian Hedged. Apparently it's giving a 61.16% yield. I'm really skeptical on that, but let's just take a look at it. All right, here we go. Yeah, I don't know how it's paying something like that, but that's what it's showing here, 60.901% quarterly. This one just has me a little bit. I always get worried about something like this, but let's take a look and see if they've actually been paying. They're all over the place paying wise. Like this, that dividend there was like 2 cents. This one was $4. So it sounds to me like it's one of these ones where it's a hit and miss. And I think it was just, it hit, the last one hit. That's why we're still seeing something. So be careful of stuff like that. Sometimes if it's really too good to be true. So for myself, like when I look at something like this, I'm not going to touch pretty much any, even a 40% or no, I'm not touching these. I will start looking probably down in the 19% area. Like I'll start looking at some of these, like at McKenzie Emerging Markets. I'll look at that. Now DFN, just to give you an idea, this here is a split core. I'm going to do a video soon on split cores. They can provide crazy dividends, but you also have return of capital. So you absolutely want with a split core, you want this to be in your TFSA or your RRSP, at least a registered account, because you don't want to have to all of a sudden find out that you've got huge capital gains because they've been returning your capital to you every week or every month, sorry. Here's the other danger with these guys. So like here right now, they have a 22% yield. They're monthly, but let's go in and take a look here. When you look at these months here. This is what happens when things aren't good for a split core. They just don't pay you. So it's not a reliable dividend. So when we have a half decent, strong bull market, it's fine. They're fine. They're they're going to pay you. You're going to be fine. So that's fantastic. But when when the market's not so great, they just tend to, they'll either do return on capital like big time, or they'll just not pay you at all. So, and I heard a lot of people complaining about DFN. I've actually invested in DFN back in the last bull market, but I got out. As soon as the market started to turn, I could see the writing on the wall, and I'm like, yep, I'm getting out of my split core. So I do try to stay out of split core unless it's a really strong market. So with that being said, we are moving. We're in the beginnings of a bull market. I think it's going to be around for a while. So the split cores are starting to become more viable again, at least temporarily. They're not long-term investments for sure. All right. All right, let's come back up to Big Head Me one more time. We already answered that one. Let's see. A DRX, I think that was part of I don't know if it was the moat video, but it was one of my videos. Yeah, and I'm up 87% on it because of you. Thanks. You're welcome. You're welcome. I'm glad to see. And Tanya says, great illustration. I will definitely watch this live again. Thank you. Yeah, and the funny thing is, Tanya says that, and then right below her, the second she said that, she won the Mountain Finance membership. That's cool. 9 says, holy banana bread. All right, and Tanya's like, woohoo, fantastic. Now says 21% up in GME because of Roaring Kitty today. Yeah, Roaring Kitty, absolutely. But you got to be careful because that'll go up and it will come down just as fast. So that's one of these ones where, if you want to, if you hear it like first thing and you know what's happening, you can get in and make some money, but you want to get out. You don't want to ride it for long. You don't want to tempt your fate. Muhammad says, I started investing a few months ago because Sun Life gave me 1.2% after a few years of leaving my RRSP with them. Okay, fair enough. And look at this. Holy banana bread. Tanya's in with the $10 super sticker. And I got to go take a look over here. It's the thank you. It's a thank you pair. The thank you pair. All right. Now, we did not take our final look at the market. So let's do that. It's because you guys have been fantastic. You've kept me busy with the comments. I'm not complaining at all. All right. So we do know that the market did end. We ended, of course, in the red on the TSX, down 0.68%. Green on the S&P 500, just up a little bit up on the NASDAQ. Gold in the green, silver in the green. Oil's down, but we got Bitcoin looking good. Our heat map, our final look at the heat map for the day. Still a lot of red over here. Definitely a lot of red. Well, Shopify, at least, they're doing okay. Restaurant Brands International, they're looking half decent as well. So not too shabby, not too shabby. BNS down a tiny bit. All right, what can we do? Once again, the ETF heat map, it's reflective of the market. And of course, here's the American side. And as we were mentioning earlier, NVIDIA having a half decent day. Look at this. What was their? So yeah, that's just fantastic. They pretty much got their all-time high again. So NVIDIA just looking strong. Right now, they really don't have any competition. That's the big thing. You may say, okay, well, there's lots of chip companies out there, but none of them are making chips that are specifically designed to run the heavy demands of AI. NVIDIA is, and NVIDIA is they're not just sitting back. This is what I love about NVIDIA. They don't just sit back and say, okay, our chips are perfect. They're like, how can we make our chips even better for AI? And they do. And they're going to continue to do that. As long as they keep above the curve that way, even all of these other companies who are thinking we need to make chips like NVIDIA, they're going to have a hard time playing catch up. So I'm pretty bullish on NVIDIA, and I can't wait to see how this is all going to roll out when they have their 10-to-1, which is coming up. I think it's June 10th. June 10th. I think somebody corrected me the other day with it. So I'm looking forward to that. All right. There we go. And our final look at the crypto map, we got Bitcoin. Bitcoin climbed a little bit higher, 2.23, and yeah, pretty good. Now, if you guys remember, we were talking earlier, I was mentioning, because it was down about here, that Bitcoin would then go back up and then come back down, because we're kind of moving in this little shape. And that's what's going to happen. Now, it'll break out. Now, when it breaks out, I'll just show you guys. Let's just do this here. So, all right, that's the size of the shape. So when it breaks out, if it breaks to the upside, let's say it breaks out here, you're looking at it going up about to, up to around 70,570. If it were to break down, it'll break down and come down and hit the moving averages. So it'll drop back down to 68,200. So we'll have to see which one it goes in. I think, I kind of think it's going to go down, hit these, and then come back up. That's kind of what I'm going to play. So we'll have to see. We'll have to see. That will be fun. All right, let's bring Big Me back up again. We got Al saying, Mohammed, free money is the best. You got to love free money. You got to love free money. My lawn this month did not give me another $10. If you guys remember me telling you about the $10 I found on my lawn, and somebody said it was the lawn paying me dividends. Well, apparently it's not a monthly dividend. Maybe it's a quarterly. We'll have to see. Or maybe the lawn is working through Tanya because she did that $10 super sticker. So we don't know. We don't know. And by the way, that $10 is going into the 0 to 100K challenge. So all supers go into the challenge. All right. We have thanks for covering the covered calls. Haha. Who covers the covered? There we go. Thanks for covering the covered calls, ENCL, USCL, etc. Thank you so much. Awesome. You're welcome so much. There we go. Al says, how do you get the heat map to show the TSE? Really simple. So the heat map, I'm going to pull it over here for you. I'm going to come over here and let me actually just open a fresh screen so I can show you exactly how to get there. All right, here we go. I was seeing myself on the screen was confusing me. All right. So that is TradingView. So if you go to TradingView, so tradingview.com. All right. Once you get into TradingView, you got products and then you got heat maps. So you've got a couple of options. You got stocks, ETFs, and crypto. So let's go to stocks. And it brings up, of course, the American. So all you do is up here in the corner where it says S&P 500, you just click on it. And then it shows you all of these charts. So there's the Canada one right there. Now they only have the S&P 5 or the TSX. They don't have like the venture. But let's say, for example, here's all Canadian companies. Ooh, I didn't see that one. Look at that. I bet you that has the venture companies in there too. Ooh, that could be a better one. See, look at that. Thank you, Al. I just realized that all Canadian companies was there. But you can choose any country, and you can look at pretty much anything that is out there. So this is fantastic. And when you're looking at it, let's say, for example, you're like, I don't care about who's down. I just want to see the winners today. You can click off some of these lower ones. And so these are just the ones that are at least 1, 2, or 3% up. And you can see, like, here we go, ABX. Oh, look at Rogers. Rogers is up. There's Loblaws, Franco Nevada. We mentioned that earlier. So yeah, Do. So Do is Skidoo, by the way. They're up. Yeah, look at this. Oh, look at this, GFL. I think they do, I think that's one of the companies that does like garbage and waste. But they're up 10.42%. Holy banana bread. Look at that. That's a nice little climb. But yeah, so that's all you have to do is just go to tradingview.com and you can use it there. They're free. Even if, I have a paid version because I use it for trading. But, just head over. It's fantastic. All right. A 9 says, I started investing in 2009. Didn't add much money in that decade, though. Well, here's the thing. Honestly, it doesn't matter how much you add. It does. Obviously. But, when you're getting started, just getting in the game is at least, you're opening it up and it gives you an idea of, it gives you a chance. It gives you a road to learning about investing. Because a lot of times I will tell a brand new investor. So if somebody came to me off the street and said, I'm thinking of starting to invest tomorrow, I know nothing. What do I put my money in? I would be like, okay, well, let's avoid stocks for the moment. Let's start with something very stable, something that takes no energy at all from you. You just have to buy it. So I would probably recommend something like a Vanguard, like a VFV or something, like, just an ETF. And then once they've got that going, I'll be like, okay, now that you have that going, you're in the game, you're going to get some returns. Let's start teaching you about the stuff that's going on in the market. Let's teach you how the stock market works. Let's teach you about stocks. Let's teach you how to know what's a good stock. Let's learn about fundamental analysis, things like that. Let's maybe even learn about technical analysis a little bit further down the road. So I would go that route with a new person, because then they're not losing money. They're in something very stable. Because for me, like, some of these I was going to say blue chip, but they are blue chip in my opinion. Some of these ETFs, you could even get them into an all equity ETF if you wanted to. It doesn't even have to be Vanguard. You can even drop them in XEQT if you really want to. You just want something that's stable, something that's going to give them a bit of return, so they got something coming back. And at that point, then start introducing and showing them how the things work. Maybe even have them work, maybe do a little bit of paper trading initially as they get into it. But then as they start to get more and more comfortable, then it's like, okay, let's start looking at some stocks. Let's see what stocks we can use that maybe complement. We'll leave the ETF there. We'll leave most of your money there, but we'll start adding maybe one or two stocks here and there, and we'll see how that goes. So, just kind of that easy way. That's how I would approach it. All right. There we go. All right. Al Bundy with 4 touchdowns in one game. That's hilarious. Team Bundy. Bismarcky says, I started my RSP via mutual funds at 18 back in the 1990s. Oh, that's very cool. This just reminded me. I'm just going back to Al for a second. So here's a funny thing. I used to be part of the Crypto Night in Canada live stream that was going on over on the Danter Banter. And every week I would show up with a different wallpaper. So I'd use the green screen. And I would, 1 week I actually showed up with the Bundy's living room. So somebody finally through the stream was like, wait a minute, isn't that Al Bundy's living room? I'm like, yeah, it is. So it's just kind of funny. All right. And Bismarcky says, buying stocks back then wasn't really affordable. So no website. Yeah, now it's very easy, but that's one of the problems, right? You take things like, I'll use Wealthsimple and also Robinhood on that side. It makes it incredibly easy, and it almost gamifies investing. So that's one of those challenges especially for new people, younger people. When you go in, like at one point, not so much with Wealthsimple, but with Robinhood, you used to get like little like confetti and things would shoot up, like, oh, your first stock. They had to get rid of that because there was a lot of negative feedback that came about the fact that they were making it very much like a game. So yeah. 9 says, yeah, even early 2010s was annoying to buy securities. Yeah. But now it's so easy. As I guess the only way it wouldn't be easy is if if you can't authenticate yourself, like, oh, I don't have a driver's license, I have no idea at all. That might be an issue, but for the most part, I think it's made it much more accessible, which is fantastic, because you're also able to, because you can do it yourself, you can avoid that bad I don't want to say not all financial advisors are bad, but you can get that financial advisor that sits there and they're like, I get a commission whether I make money for you or whether I lose money for you. So there's no real incentive there. I really like the idea that if you have a financial advisor I'd like it if you only had to pay them if they make you money. To me, that would be the ideal thing. Like, hey, you made me money. You made bad choices. You don't get paid. Sorry. It would certainly make them care a lot more and perhaps make better choices. So that's always that fun thing. So the do it yourself, yeah, it's fantastic. You can do a lot of it. But the big onus is that that does put the whole onus of due diligence back on yourself. So you kind of have to sort of get yourself into that mindset that I'm going to continue learning, because if I don't learn, I'm going to be in trouble. I'm going to lose money. And and the other downside too is sometimes when you're looking at you look at money, for example, in your app, it doesn't have that same feel as actual money. Like in the olden days when we used to carry money, if somebody came along and took $20 from you, you'd be like, oh my God, they took $20 from me. I can't believe it. Oh my God, what am I going to do? Whereas, here you lose $20 and you're like, oh yeah, okay. It's just, so it kind of has that thing. And it works like that as well with Amazon. Like Amazon loves that part that, when you look at something that's like $20 on Amazon, you're like, oh, yeah, it's just $20 or whatever. If you went in the store and you saw the same crazy thing, you might be like a little more hesitant to spend 20 paper dollars on it. So just one of them funny things the way the mind works. Al says, can you buy any stock, MF, ETF, not Wealthsimple, from US, from any broker, or do all brokers have limited lists like Wealthsimple? It depends on the broker. I mean, each broker is a little bit different. I find that, like, I use National Bank Direct Brokerage. I've never yet run into something that I've been looking for that they haven't had. So, they have the American stocks. Like you can also have your American count. So I think they do have access to, there have been, I know in the past, there have been stocks that I had on National Bank that I couldn't pull up in Wealthsimple. So, but Wealthsimple has been getting better. They've come a long way. The amount of stocks that they offer today is a lot more than where they were just even 2-3 years ago. Like 2-3 years ago, you couldn't even get Disney on Wealthsimple, but now you can. So they've been improving, and that's one of the things I do like about Wealthsimple. Like I talk a lot, like I love National Bank, but I also do love Wealthsimple. For me, the biggest point came down to when I'm doing my trading, I need something that works well on the computer. And Wealthsimple, I'm not happy with their computer interface. They have a fantastic app, but I'm not going to trade on an app. I need my screens. I need all my screens and all my data to be able to do that. So that's kind of the way that I have been handling that. All right, everybody. This has been a fantastic market close. I gotta love it. We'll be back here again on Wednesday. We're gonna do it all over again. And I did say I would give you guys a chance to win another one on Wednesday. So we'll do that. We'll do that on Wednesday. So maybe we'll have 3 this week. That'd be kind of cool. I almost missed those weeks when we did 5. Because we had maybe was it 2 or 3 weeks, I think, where we had 5. It was fantastic. It was great. Anyway, until then, guys, I'm going to bid you guys farewell. Have a fantastic dinner. And I will have a yes or a no on my thumbnail, depending on whether or not we get the rate cut on Wednesday. So don't even look at the news. Just find my thumbnail. I'll get it up early. I'll get it up nice and early for you guys. I'll put it up first thing. It'll be my number 1 priority. Well, as soon as the rate's announced, whether it's a cut or a pause. So we'll get that up for you. All right. Until then, everybody, take care. We'll see you again very, very, very soon. Bye, everybody. See if it works.